Good morning, good morning. How's it going, everybody? Glad to have you with me. It's a gloomy, dark day outside, but that's okay. There's a lot of sunshine happening inside my office, inside the family office here at the Arujo compound. Our investments are doing extremely well. Our trades are performing extremely well. And what's really fascinating is even though the indexes have experienced a drop over the last few days, most of our portfolio is heading up. And the reason for that is that when you locate institutional trades that the big institutions are buying, doesn't matter if the indexes go down, they continue buying and price continues going higher. Now look at this one, Bitcoin. How about them apples, right? Not only did we call the exact top of Bitcoin, but we told you that price was going to break to the downside from the range. And lo and behold, look what we got here. We got the breakdown downwards through the range. And not only that, but if you saw my post that I made the other day, I told you that we had price rallying up to that daily area of supply and that we should expect a drop from it. And look what took place. Beautiful. Just as I had told you. I mean, if that's not enough for you to sign up and become a student with us, I don't know what is. I don't know what you're waiting for. I mean, has anybody else produced any type of accurate analysis like that? I mean, I haven't seen it, okay? Calling the top of Bitcoin and then the exact reversal point where price was going to drop, and then the exact supply area that price was going to drop from, all laid out to you before it actually took place. Unbelievable. Well, anyways, I want to thank the new members that have joined up. There has been some of you that have seen what we've done and said, you know what, I got to get in on this action and start learning from these guys because obviously they know what they're talking about. I don't want to miss anymore, so let's get in there. So welcome to those people who have joined. Nice to have you. So today I want to go through gold. I want to go through silver. I want to do what we've been doing over the last several weeks, where we're pointing out what's taking place on each chart. Okay, we're looking at institutional buying and selling. Okay, the institutions are the ones that move the markets. So all we care about is where are they buying and where are they selling. And is price coming into buying zones and we're expecting them to continue buying, therefore pushing price up? Or are they going to be removing those zones and causing price to drop? Okay. So what I like to do is I like to look at each individual time frame and decide whether or not that time frame is bullish, bearish, neutral, or we should be cautious of what is taking place on that time frame. All right. It's been very helpful, I think, to many of you from the feedback that I've been getting. And so we'll continue doing that. So we have gold here. And gold has been bullish for quite some time. Only thing is that we're starting to see a breakdown of this bullishness, okay? And when we go through the CFTC data, which I did a video on, and I posted it this weekend, you guys should go take a look if you haven't seen it yet. I talked about how they started taking profits on those long positions, which is fueling a move to the downside. Okay, so we got that move to the downside. And as you can see, as price was dropping downwards, we got contact with an institutional demand area. So this is the reason why we're seeing bullish gold right now, okay? Because price dropped into an institutional area of demand on the daily time frame. And that means short-term momentum should be up based on that demand zone being contacted. So when we look at the time frames, I look at monthly time frame and I see it as bullish. Why? Well, because it's moving upwards. All right. Now, do we have a trend on this chart? We do, but price is so far away from where the trend line exists that it's signaling to us that there could be a pullback at some point because we're just so overextended from the trend line. So this is where, you have to look at the CFTC data and take that information into context because, when you see what's happening here on the monthly time frame and then you see long positions reaching near maximum size, you can safely conclude that their profit taking could very likely cause price to drop down to areas of demand on these higher time frames. So if you look down here on the monthly, you'll see that the next area of demand is the 2500 area. Okay, that's quite a distance down there. So we go to the weekly time frame, and what do we see? We are bullish. Okay, this is a much nicer looking chart in my opinion because we have an ascending trend. But if you take a look at where price is and where the trend line is, it's very close by. And not just that, but we have an institutional area of demand sitting right here. This is the most ideal chart, in my opinion. When I look at all the time frames, I'm looking at what's the most likely, what is the chart that is likely going to come into play and facilitate something on a larger scale. And I think the weekly chart is that candidate for me because it's got the best structure. Demand is sitting right below price. We got an upward trend line's right there, and it's looking pretty darn good. Okay. So daily chart, is it bullish? What are we? It is bullish, but with some caution. Okay. And the reason why I say with some caution is because when we look at this structure here, I want you to take a look at this, okay? When we look at this structure here, all we have is a big move to the upside, okay? It's not a sustainable move. When you see a straight move up like this, it's not sustainable. What is more sustainable is something like this on the weekly time frame, okay? Where we have an actual trend supported by a trend line, supported by institutional buying. This is sustainable. So this tells me over the medium term, we should expect price to go higher. Okay. Medium term is many weeks, many months. Okay. So it could take many weeks to get down, but then we'd expect there to be a reaction, some buying, and price to continue going higher. So if somebody was to buy gold at this point, for instance, it would take probably many months until you were in the green if price was to drop. But the expectation is that over a longer period of time, we should see price continue going higher. Not that I would want to buy gold at this point. I wouldn't, because I think it's too high. And I think that when the banks are focusing on taking profits, I don't want to be focusing on buying. Okay. So I'd like for it to retrace further, come into some demand. And then when I see buying taking place on the chart and in the CFTC data, then I'll be interested in buying. Okay. When we look at the 4-hour time frame, what do we see? We see institutional supply came into play here. In fact, I told you about the supply before they even rallied price up into that supply to facilitate the drop. So the drop came in and it contacted some demand, and now we're seeing the push up, and now we're getting that supply zone contacted one more time, right? So in the overall scheme of things, could price continue higher? Yes, it could, but it has to remove this area of supply, period, okay? If they don't remove that supply, what's going to happen is they're going to use this supply to facilitate a move back down towards the daily area of demand here, okay? I think there's a very good chance of that. In fact, I think there's a chance that price will reverse, come down into this area of demand, and then break through that demand and come down to contact the area of demand on the weekly time frame. Okay, it's a lot of moves, I know, a lot of moves, but let's take one thing at a time. Right now, we're contacting the 4-hour supply. Let's just wait and see what happens. I wouldn't personally be taking a short there because institutional buying is the main driving factor right now on a daily time frame, and daily is a higher time frame than 4 hour, so it takes precedence. Okay, it is a higher time frame, so it's more powerful. You don't want to make assumptions, so I wouldn't be going short here. But what I'm watching for is if the banks use this area of supply on the 4 hour time frame to drop price, then it's likely that price is going to come down, retest that daily area of demand, and then eventually break through it and head lower to the weekly area of demand. Okay? Then we'll watch from there and see how things unfold. All right, let's go over to silver. So we've talked about silver. We talked about how it's bullish. It's setting up for a move to the upside. I was also pointing out to you that on this daily time frame, we had a situation where institutional supply was removed. Okay, if you remember, we had an institutional area of supply here. And I told you, if gold was retracing and contacting some medium-term demand as this area of supply was being removed, then we would have likely, very likely, seen a continuation of price to the upside after this area was taken out. But instead, the area of demand that was created was removed and price has since dropped. And the reason being is because of the weakness taking place in gold. All right. So right now, short term, this needs to set up to be bullish before we can get any medium term move to the upside. Because, when I look at the monthly time frame, it's ready to go higher. Okay. When I look at the weekly time frame, it's ready to go higher. It's just this structure here on the daily time frame, it's bearish because supply is coming in and pushing price to the downside. We have to wait till the daily chart becomes bullish, and once it becomes bullish, we ride the wave of buying on that time frame to facilitate the larger moves to the upside that the monthly and weekly chart are ready to take. All right, but that's not there yet. And we should really wait until gold sets up and comes down into institutional demand before that takes place. All right? That is the reality of what's happening with silver. Forget Bollinger Bands, forget wave patterns, forget harmonics, forget all that stuff. This is what's really going on with silver, okay? Now, let's go over to the Aussie. So we were talking about the Aussie in our class that we did yesterday with students. We did a CFTC masterclass, and we dove really deep into the institutional positions on all the major currency pairs. We looked at gold as well. And by examining the CFTC data and the technical charts, we were determining what was likely going to be the move that was going to take place. So I'm not going to go into too much detail with what I'm observing when combining the CFTC data with the technicals, but I'm just going to give you some biases here, okay, from what I'm seeing. When we look at the monthly time frame, it is bearish. Okay, and the reason why it's bearish is because we have institutional supply that has come in. This is the latest area of selling that came in, right? It's not buying that's taking place. It's selling that's taking place. So, and that's the latest selling that's been taking place. Okay, there hasn't been any buying that's been taking place. But I can show you that there has been institutional demand here on the weekly time frame that has been contacted. Okay, it was previous buying that is now coming into play. And so for previous buying to come into play, what they typically would have to do is come in with short-term buying to help facilitate a move higher. And so we had short-term buying, as you can see, a reaction to the upside, and it was pretty good. It was enough to remove an institutional selling area. But as you can see afterwards, there wasn't much of buying taking place there that removed it. There was some buying, but then price immediately retraced back, and now it's settling into that area of demand again. So I'd be very cautious with this chart with the daily time frame because it really hasn't been showing, oops, it really hasn't been showing much serious buying taking place. Okay. So again, with that supply being removed, we get this idea that we might see a move to the upside take place. But that move to the upside is likely not going to take place unless some demand comes in, some buying zones are created, and there was no buying zone created here. And unfortunately, all this price action here, there's no selling here. There's no major selling here. There's no major selling zones here. So it'd be very difficult to locate buying zones unless there's selling zones. And so if there's going to be some buying taking place here on the short term, they're going to do it before we even know it. Okay. So I'm kind of staying away from this chart. I'm not looking to take any long positions. I would be interested in going short only if price got up to this area on the monthly time frame. Okay, because for me the bias is monthly is bearish. I want to join the selling that's taking place on the longer time frame. Okay, but price needs to get up there first. Okay, if price doesn't get up there, I'm not interested in selling unless we break through this weekly area of demand and I see some new selling taking place on the lower time frames, then I may join in on the selling. Okay, Euro US dollar. So we're moving higher, and this was what we had forecasted with members yesterday. This is a tough chart to read. I'll tell you right now, it's a very tough chart to read because when you look at the different time frames, there's a lot of different things taking place on each of them. All right. One's got demand, the other one's got supply. They have lack of structure, they have lack of trends. So it's very difficult to determine price direction. But so far, we've been nailing it with our direction. And we said short-term move to the upside is what we're expecting for this week. And as you can see, there has been momentum to the upside. So here's how things are as it stands right now. Monthly, we have a somewhat bearish bias on the monthly time frame. The reason being is because we had institutional selling come into play here, and it pushed price to the downside. Okay, but if you see the momentum candles that we have 1, 2, 3 momentum candles to the downside, and then price paused. Okay, so now we're getting a short-term move to the upside. Bottom line is over the long term, we're expecting a move to the downside until demand gets contacted. That's usually how price moves. And demand is located down here. So as you can see, we have not reached this area yet. So over the long term, which is many weeks, many months, then we are expecting a push to the downside. Okay. So we haven't hit that yet. So we got to wait and see how things play out. On the weekly time frame, we have a bearish bias. And why do we have a bearish bias? Well, because when we look at the charts, we have to determine what are the banks doing in this chart on this time frame. What are the banks doing? Are they buying or are they selling? That's the most important thing you want to look at. And we could tell you that they are selling. And but the last really significant area of selling was all the way up here. So yes, were they selling? Yes, they were. But that was back last year in October of 2024. We're in March. You know, that's several months ahead. So are they still focused on selling? It's hard to say. Look at the bottom here. You know, that's like some people would say a double bottom, right? That's been many weeks down here where price has settled down, and now we're starting to see the momentum to the upside. The bottom line is there is no demand that's being contacted here on the weekly time frame. So this retracement up is being facilitated by short-term buying. Okay. So if we want to engage in this chart to the downside, then we got to look for short-term selling to come in and be a major player on the chart. And so let's go over to this chart here, the daily time frame, and I would say right now this is neutral. Okay, it's neither bullish or bearish. Okay, there's no bullish structures being formed here. There's no bearish structures being formed here. When I look at what is the latest areas that were created, look, there was a selling zone created here, and that selling zone was respected and used to facilitate a price, for price to move lower. Okay. Since then, there was a supply here, it got broken through. There was a demand here, it got broken through. So there hasn't been any buying or selling that has been respected since that area. So that tells me the one important area that I should be focusing my attention on is this selling zone up here. And so as you can see, we are rallying back up towards that area. Could we rally and then see a drop from that area? Yes, it's possible. It is possible. But we don't have a descending structure here on this daily time frame, so there's really nothing solid to secure the idea that price is going to be dropping from there. So what I'll be watching for on this time frame is for selling to come into the market, and not this type of selling that existed back in November of last year. I want new selling to come into the market, okay? Because this move upwards on the weekly time frame is somewhat concerning. It's been there down there for a long time, and we see momentum shifting to the upside. So I wouldn't want to engage in selling at this point because of that. So I want to see that the banks are focusing on selling. And for me to see that, I need to see bearish structures being formed on the daily time frame, and I want to see new selling areas come into the market. All right. If we look at the 4-hour time frame, this is bullish. Okay. And the reason is this is bullish is because we're getting bullish structures being created. Okay. Look at the highs here. We're getting new highs. All right. We have institutional demand that is coming into play. So we see buying taking place on the shorter time frames. We see buying, holding, buying zones are holding, facilitating move higher. New highs are being created. This is a bullish structure. So the earliest indication that price is going to turn bearish will be located on this time frame. So I'll be focusing on the 4-hour time frame, watching for bearish structures, watching for selling, watching for ascending trend lines to break, watching for institutional demand zones to be taken out, and then I'll be paying attention to which areas of selling I want to focus on entering into short trades on. All right. All right. Let's go over to the pound. So upside momentum, this is what we were looking at. And so we have a situation here. I was mentioning this to our students. We have a situation here that you need to be focused on, and that's the weekly time frame. On the weekly time frame, we have a situation where price is in a range, okay? We have institutional selling that exists above price, and we have institutional buying that exists below price right here. So we could essentially be getting price rallying up to supply and then dropping into demand and then rallying, okay? We could get that over the medium term because of the weekly time frame. So many weeks, okay? Many weeks. Rally up, rally down, rally up. For there to be some significant momentum coming into the charts, we would either need supply to be removed for there to be momentum to the upside, or demand to be removed for momentum to come in to the downside. But just be aware that right now the bullish pressure is on, and soon we'll be coming into some supply, and I am definitely expecting to see some reaction to the downside from that area. So just be very cautious of that if you do trade the pound. In Kiwi, not much going on here, but you saw the CFTC data, and it's pretty interesting because the CFTC data is suggesting that the banks are reaching maximum size, okay? So if you take a look at my chart here, I have it have a label here. Bank max size on shorts is 67,000. We reached 67,000 right here. Okay. Could they take this to a new maximum size on shorts? Sure, they could. But, you know, what's likely is that they're going to take profits on those short positions, and that's going to help fuel a move to the upside. So you see the pound already moving up. You see the euro already moving up. This one's still stalling, not really kicking in there. I think one of the things that I could tell you that I've experienced by watching price action and understanding what's happening on the charts based on the institutional buying and selling, what I've seen many times is that the banks tend to focus on a few currencies first, and they make their moves with those currencies, and then they go to other currencies and drive price in the same direction as the currencies that they just finished moving. So likely we're going to see a move to the upside. When is that going to happen? I don't know. But the likely move is that we're going to see upside. Okay, that's the likely move. So am I going to trade it? Not really, because it's not high odds. There's no trade setup here. Okay. For me to buy short term, because this would be a short term move that could turn into a medium term move. There's no guarantees of that. But for me to be buying a short term move, I'd need to see short term buying. And I need to base my risk off of an institutional demand zone. If they're not coming in with a very specific demand area, then how am I supposed to buy this? Okay, there are ways that I could buy it, but I wouldn't want to do that. Okay, what I'm looking for is for them to create an institutional area of buying. Okay, that way, when they rally price up and come back down into that buying zone, I can pinpoint with incredible accuracy where I should buy and where my stop loss should be. Stop loss would be right below the zone, because I know that that zone is the area where they have all the buying orders. So that will protect me from being stopped out as they come into that buying zone, and then they will shoot price up like a rocket from there. Okay, but I don't see any buying zones here, so I can't take a trade off of this. US CAD holding quite nicely. We got an initial move to the downside, and you know what that was? That was fueled by profit taking on long positions. We've seen with their positions for a long time that they need to take profits. But remember that all-time maximum on their longs is 219. And, you know, we reached 210 back here. And so all this move, they start taking profits. And now they're at 170 up here, okay? But they've since moved down and moved price right back up. Look, bottom line is there's a bias, a bullish bias on the dollar, okay? And as you can see, this move down was very short-lived. There seems to be more buying pressure here. And now that they are quite a distance away from the all-time maximum size on longs, they could start reaccumulating a position and pushing price higher. There's different ways that this can play out right now. It's a very difficult chart to read because, again, they're taking profits and they're adding back. There's no trends. The only major areas that are being contacted are supply areas, one up here and on the weekly time frame. So we have medium-term selling that existed back in the day and long-term selling zones that are being contacted, which should dictate price. But the banks are not focused on opening up short positions right now. They're focused on profit taking. So there's two things that take place here when a supply is contacted. Either that supply is going to be used for the banks to take profits on long positions, or that supply is going to be used by the banks to accumulate a short position, okay? If they're accumulating a short position, then there's without doubt price is going to drop down on the charts, okay? But if they're going to use a supply area to take profits on a long position, it will also fuel a move to the downside, but it can get tricky because, as you can see, we had a move to the downside, but they're starting to reaccumulate again. And they could take price back up to maximum size and potentially even surpass it if they wanted to. That could cause price to rally up. and break through these areas of supply. It is very possible. Okay, I'm just laying it out for you. That's why I'm staying away from the US CAD right now, because there aren't any high probability situations for me to put my money in this. Okay, if they were accumulating a short position and we didn't have this demand area right below price, I would be looking for selling zones to come into the shorter time frame, and I would be shorting the US CAD. That's what I would be doing. But I see a lot of evidence to suggest that the dollar is going to go higher, and so there's going to be a lot of bullish pressure here. I would only trade this if price dropped to this area of demand. I'd be a buyer. Okay? This is where the odds would be for a trade, is if price dropped down here, I would be a buyer. But it hasn't dropped down there yet. So I just sit on the sidelines and wait. I will not put my money in the US CAD in any way, shape, or form unless that were to happen. Let's go to the US dollar Japanese yen. This one's an interesting one. Have you seen the positions? Maximum size. We've reached maximum size, folks. Maximum size for shorts was surpassed, and now we have a new maximum size. I have it labeled as max size for banks is 171,000 for shorts, and we reached that right here. Okay, as you can see, price has rallied and contacted where? My institutional supply area. I had this zone drawn before price even contacted it. Okay, so I'm not drawing these zones after price contacts these areas and drops. I have these zones drawn before. Excuse me, just like I had this zone drawn here. Now we took a long trade and we profited from that. We entered here, exited up here. We took our profits because that's when supply came into play, and supply was used to facilitate a move lower. Okay, more supply came into play. Price rallied into that area of supply, and now it's being used to move price lower. So what do we see here? I'm seeing evidence to suggest a bearish chart. You know, I see major supply being contacted here on the monthly time frame, and the price action that I'm seeing here is very bearish looking. You know, some people would say head and shoulders pattern. It's massive supply coming into play. All right, and on the shorter time frames, we're seeing that supply coming into play. But how much lower are they going to take price? They've already maxed out their shorts. I'm not jumping in and buying this unless I see buying coming into play. Okay, I'm not going to make the assumption that since the banks are reaching a maximum size on shorts, which typically means that price is going to reverse to the upside from all the profit taking on shorts, I'm not going to assume that that's going to happen until I see it happening. And right now, according to the daily time frame, selling is what is taking place. They're adding shorts. So I'm not going to even be considering going long unless I see demand zones coming in. And I'm going to be very cautious with going short because they've already maxed out their short positions. If there was a lot of room to reach until they reach maximum shorts, I'd be looking to get in short. But the way things are right now, it's not very good. Okay. Another thing I'll point out is that we have institutional demand here on the weekly time frame that was previously used to propel price higher, and that is right now in play. Okay, even though we have short-term selling coming in and forcing price to the downside, we have a medium-term buying zone that's in play. So now it's a matter of which one's stronger. Is it they're selling or they're buying? Okay, because either or is going to drive the direction of the market. It's not you, it's not me, it's not the other traders out there buying a few yen here and there, okay? It's the big institutions that are deciding which direction that they're going to take it in. And they know exactly which direction that they're going to take it in. We don't, but what we can see is where their buying was and what's happening on the smaller time frames to determine what their thinking is and what they're doing on the shorter time frame. So I can tell you right now on the shorter time frame, they're focused on selling. Okay, look at this rally up to our supply area here. Look how incredible that is. That's an institutional selling zone that was contacted here. Okay, this is why it's so important to be able to locate these selling areas and buying areas of the banks. Otherwise, what are you locating? What are you doing? EMAs, they're not paying attention to EMAs. The only reason why they would ever pay attention to an EMA is to lure us into making bad trading decisions, okay? What you want to be focused on is where are they buying, where are they selling? They're selling right now, short term. On the 4-hour time frame, they're selling. On the daily time frame, they're selling, okay? So they're focused only on selling right now. So let's just wait to see what happens. If they remove that institutional demand area on the weekly time frame, then there's no stopping this chart really from moving lower. The only thing is, how are they going to do it when they're really maxing out on their shorts? Maybe they're going to create a new max. Maybe they're going to take it to 180, 190, 200,000. Maybe longs have reached 237,000, so why couldn't shorts, right? So maybe that's going to happen. Let's watch for that, because I'm really seeing the real strong possibility of this continuing lower, okay? I just wouldn't be in it right now because it's too risky when we have, you know, institutional buying zones that are in play. All right? Okay, folks, there you have it. I hope that was helpful to you, and I hope it gives you a little bit more insight as to what is taking place on the charts. Keep an eye on this, because it's going to play a pivotal role in how price plays out over the next few days and next few weeks. And that's it. We'll keep you informed of what we see moving forward. If you want to join us, you can join us. If you don't have the money, that's okay. Follow us on social media, on our YouTube, on our X, on our Instagram. Like and share our posts. And at the end of March, we're going to be looking for somebody to win a free scholarship for the month of April. We've already picked our winner for March. This gentleman was liking all of our posts and really supportive of our social media posts. And so we had a bunch of really good supporters, and we had to pick one, and we picked this gentleman. And so he's going to be participating in all of our classes. He's going to have access to our library of video lessons, and we wish him all the best in his studies. We also posted a testimonial of one of our winners from the February scholarship. We picked a person who won free access to our school for the month of February, and he was kind enough to share a testimonial, and we posted that on our blog. You should take a look and see what he has to say. He was very honest and basically laid out his experience with our school, and it was extremely positive, so we really thank him for sharing that information with us. Anyways, we'd love to have you. Come and join us. We want you to be successful too. All right? We'll see you next time, guys. You take care of yourself.